ICT or smart money concepts. A lot of new traders think this is the new holy grail of trading. Traders believe that there is no other way to be profitable if you don't trade these strategies. The growth of popularity of these concepts has skyrocketed in the last couple of years, and it's becoming very clear the effectiveness of these concepts is falling. Now, this week, I made $42,000 and I did not need years of learning ICT or SMC concepts, but rather I traded one simple strategy. However, because I'm claiming to make $42,000 in 3 days of trading, it is very crucial for me to validate my claims. So right here, I actually have my phone with IBKR right here. This is the most regulated broker, and I want to show you a live login. So if I click my phone right here, you can see that we load up $9,600 today. And if I scroll over here, you guys can see the weekly $0, $22,000, $31,000, and $41,239.65 in 1 week. You guys can see I did not trade on Tuesday. I only traded on Monday, Wednesday, and Thursday, and I still made $42,000. So with the live login out of the way, how did I make this profit? Well, I can tell you I did not have advanced concepts and I didn't have 5 to 10 different entry criterias. Rather, I had one simple strategy that I can replicate on a daily basis to make consistent profits. So in this video, I want to show not only the strategy that I took, but the real trades I took in real time. So let's get into the video. Before we get into this video, if you guys want to see from A to Z exactly how I would make $10,000 a month trading as a new trader, make sure to like this video. If this video gets to 2,000 likes, I will drop a full 1-hour video from scratch to finish how I would make $10,000 a month trading. SMC is complicated, but simple is better. Now, what do I mean by this? See, at one point, every strategy had a high win rate. No matter what you were trading, at one point, that strategy had a high win rate because others weren't trading it. And if you were to backtest that strategy over a long period of time, you would see in the beginning, it had a very high win rate. But as more people start trading that specific strategy, that win rate does diminish. Therefore, as we can see here, this is a simple support and resistance chart. As we can see, the price came down. We then made a level of resistance, and then we made a level of support. So theoretically, every time we come to that level of support or resistance, we should short or go long, right? So as we can see, the next time we come up to this level of resistance, we go short all the way to our support level, which would be a profit target. And then at that support level, we would go long for, once again, that resistance. At that resistance, we would go short again, but then what happens here? As we can see, when we went short this time, the stock reversed and moved to the upside. Why? It's because this level of resistance had multiple touches and it took out all the liquidity. And therefore, if it was as simple as just taking support and resistance trades based off of key levels, everyone would be rich. Now, another example we have is this trend line. As we can see, we were forming this trend line. We have multiple touches. And therefore, theoretically, every time we come near this trend line, we should be going long on this position, right? So the next time we come here, we should go long once again. We come back, we should go long once again. But then here, what happens? We see the breakdown of the trend line. So as we can see, for the people that were going long here, that trend line no longer works and the trend has now changed to the downside. Now that makes sense, but what does this mean? What I'm trying to show you is the edge of your strategy slowly diminishes over time. What this means is every strategy has proven statistics behind it, which shows that it's profitable over a long period of time. And to ensure your strategy has these proven statistics, you obviously need to backtest your trades. However, your strategy's edge will diminish over time if you are not constantly adapting to new markets. So for SMC, when most traders take one side of the market, naturally for orders to balance, the market will inverse. What this means is if you have a strategy and most people are seeing the same thing as you, the market needs to balance the orders. And it's going to balance the orders by looking at where most liquidity is. And therefore, the market makers will go for that liquidity. Like I've talked about in previous videos, the market moves from liquidity level to liquidity level. right? Wherever the most liquidity is sitting on the chart, that's where the market will go. And therefore, if there's a lot of liquidity sitting at one level, the market will naturally inverse that level to take out that liquidity and balance the buy and sell orders in the market. Now, the reason I'm saying SMC or ICT is complicated is because as we can see here, now, of course, this has indicators, but he's looking for that order block, right? He's looking for an order block entry for the move to the upside, but for me, this just looks too complicated. Trading does not need to be this complicated. In my opinion, complication equals unprofitability. These two things go hand in hand. And the reason I say this is because when your edge starts to diminish, what you'll notice is if you have a simple strategy, it's very easy to make a couple tweaks to make your strategy work again. However, if your entry criteria is super complicated with advanced ICT or SMC or any other type of strategy, it will be so much harder for you to change your entry models. And therefore, for me, simplicity equals profitability. So with my thesis out of the way on why I believe simple trading strategies work much better than SMC or ICT advanced strategies, I want to mention ICT and SMC could theoretically work. However, for me, in my personal experience, and you guys saw the live results as well, the more simple the strategy, the more profitable the trader. So with that being said, let's go look at some real trading examples. So what is this revolutionary strategy? At the end of the day, you guys know I trade the break and retest setup. It is super simple. I am looking for trades with high momentum and I'm looking for the lowest risk pullback. Now, with this being said, I have a full strategy video going over exactly in detail how to trade the strategy, but in summary, all I'm looking for is a move to new highs, then a higher low. The higher low then proceeds to break the previous high, showing momentum and buyer stepping in, and then that previous high will turn into a level of support. We enter in at that level of support, looking for high of day and higher profit targets such as previous day levels, higher time frame levels, or whole psychological numbers, and our stop loss can simply be either at a break of this key level right here with this previous high, or at the break of this previous higher low. Now, in the most simple terms, this is the strategy. It is super simple to follow. I've been trading this strategy for multiple years now. You guys saw the live results, so let's get into the real trades I took taking the strategy in real time. Here we are on the first trade. I'm on TradeZilla right now, and this is where I journal my trades. As you guys can see, $9,682.53 off one trade. I took 20 contracts for $40.47, which is my commissions. And overall, I made 36.75%, and I made about $9,700 before the commissions and fees. And of course, we made $9682.53 after them. You guys can see exactly where I entered and exited. So you guys can see I entered on the close of this 939 candle. I exited some at high of day and I scaled along the way. And then our final profit target hit up here. And of course, you guys can see that as well for the actual options contract as well. I entered in at about $15 and my last scales up here were about $30 on the final contracts, right? So the 37% right here is on the total size of the trade, but my final trailers did end up running over 100% on this trade. So let's get into the actual chart to see this trade. So here we can see NVIDIA. The first thing I usually like to do is mark out the previous day high and the previous day low. This just helps me understand that if the stock is above or below these levels, it's either bearish or bullish. Now, after this, I go down to the lower time frames, and on the lower time frames, I'm going to mark out key levels that NVIDIA can bounce from. Now, you guys know I really like the pre-market high and pre-market low strategy, and therefore I always mark out my pre-market high and pre-market low. And then in this example here, on that previous day, I also had this level marked out here as well, which is 822.19. And this is because NVIDIA had a key level of support here. We bounced up, we moved and broke below, and this was a solid retest for a downside entry. Therefore, there's going to be a lot of liquidity sitting here, and this is where we could have a potential profit target for if we do want to move to the upside. So with that being said, these are all the key levels I had going into the day. And then I moved to the 1 minute time frame. And with all these key levels, all I'm looking for is a break and retest. It really is that simple. And this is how I made the $9,700 on that specific day. So as we can see, when we open up on NVIDIA here, we see a clear level of resistance right here on the first opening candle. We broke above that. And now this is once again that A+ break and retest, right? You see the high, we broke the high, and now we should simply come back if we have strong price action, which is key. If you guys don't know how to read price action or candlesticks, I have a full guide on my channel for that as well. And then we would be looking for high of day and our profit targets at 804, and then of course 822.19s, right? So with that being said, let's keep playing out the chart. there's a clear breaks, right? So we have a clear break on NVIDIA. And what do we have here? We have the retest. So we held down here, we broke up, we retested, and look at this. This is such a strong wick from the downside, which means that buyers are stepping in to slowly bring the stock up, right? Therefore, we would want to enter into this trade here, and our stop loss in this scenario can simply be the opening print. The opening print is where the stock actually opened up in the day, and there's usually liquidity sitting there. And this also coincides with the fact that if we do break back below this key level at 791.79s, we will most likely reverse the trend, and therefore this is a very low risk entry with our final profit targets being at 822.05s. This means this is a 5.63 trade. Now, you guys know I made $9,600 on this trade. What this means is the risk I put on this trade was about $1,700. Now, of course, I did scale out of the position at high of day, for example, 804.59s, and you guys saw those scales as well. So realistically, this was more so about a 2.5R trade. However, the reason I scale out of the position is to lock in cash flow, right? I think it's really important to scale out of positions, and I have a full video talking about why you should scale out of positions rather than waiting for the final profit target. It just makes sense with the probabilities. But with that being said, I entered into the NVIDIA trade right here, looking for my first scales at around high of day, 804.59s, and then my final scales at 822. So let's see how this trade actually did play out. We can see we actually reached that 804.59 fairly quickly. We came back, we retested, right? Notice how we're retesting that 804.59 right here, right? So this is another potential trade. If you did not get into the first one, you could have potentially played this key level as well. Let's keep playing out this trade. So we can see that we are noticing a little bit of consolidation here, but as long as we break these new highs, we can make our way up to 822.19s. And just like that, you guys can see we hit 822.19s and hit our profit target. So this was the full trade that I took on NVIDIA. You guys saw exactly how I draw those key levels, why I entered into the trade with strong price action, and how simple of a strategy this is for a newer trader to learn very quickly, but also an effective strategy for profitability. Now, one thing I want to make very clear is I take these trades live. A lot of people just talk about this hindsight, but every single trade that I show in this video, I took live in real time in the accelerator program, and the students also saw those trades live as well. So if you guys want to live trade with me every single day, make sure to click the link in the description for the accelerator program. We will be shutting down for new students next week for at least 2 months. So if you guys do want to live trade with me, make sure to click that link in the description. But with that being said, let's go over to the next trade. Now, on this example here, instead of going back on the chart, I want to show you the live trading session we did on April 22nd. We record every single live trading session that we do. Therefore, if you're busy with work or anything like that, you can come back and still see exactly the trades that I took live to still learn from those sessions. So I want to preface off this trade by saying, on this day specifically, I took the first break and retest setup right here on this candle, and I was looking for essentially a big move to the downside, and then we moved up, and then we also held below this key level of 785.19s. I took a short position here looking for this low of day at 775.56. Unfortunately, we got stopped out of this trade, so the first trade we took for the day was a loss. However, in this example here, we can see that NVIDIA came back down, and this time we were making those higher lows with clear market structure, higher lows, and lower highs at the same time. Therefore, I was looking to re-enter into this trade with the 84% rule. I have a full video dedicated to the 84% rule and exactly how to use it. So if you want to understand the 84% rule a little bit more concisely, make sure to watch that video. But let's see exactly how I took this trade in real time. Once again, I'd be looking at I'd probably say play the same contracts I was already playing, probably the 780 cons. Yeah, I'll probably just re-enter these 780 cons. 780 contract, or 780 puts, April 26th. If we can get a nice rejection off this 784, 866 level. So right here, as you guys can see, I'm just letting everyone know exactly which contracts I would be playing on NVIDIA if I re-enter the trade. I do this to ensure everyone's playing the exact same contract, so there's nothing to hide. There's no discrepancy. You guys know exactly the contracts I'm playing within the trade that I'm taking. Now, of course, on this trade here, what I was waiting for was a little bit more weaker price action, so let's keep playing out the trade. All right, I took another position in NVIDIA here. Stop's going to be above 788.08 here. I like how this candle's closing on the 5 as well. I think we can get low of day. First target's going to be 777.33s, then low of day, and then we're going to move from there. NVIDIA looks nice here. So as we can see, I took NVIDIA here on the break of this key level with weak price action after an inverted hammer close. Like I said, this is the 84% rule. I already took NVIDIA here. So with the 84% rule, what the 84% rule states is the trade should work out 84% of the time, the second time. Now you guys can see the stop that I have very clear for everyone to see. My first profit target is going to be this low of day level and then higher time frame levels, like I said in the actual video itself. Now let's play out this trade and see what happens. Also with QQQ dropping, I think QQ, if we drop below 416.82s, we'll get a nice continuation to the downside. So you guys know I like to keep my trades very simple, but what I was saying here was QQQ looks good for a downside move. The reason I was saying this was because NVIDIA is going to break to the downside. What is NVIDIA? It's a tech name. So what's the indice for techs? It's QQQ. So you want to monitor QQQ with the actual tech name you're trading, right? And so for me, I understood QQQ is making this flat bottom, and therefore if QQQ breaks below 416.78, this should give NVIDIA enough momentum because the indice of the tech is breaking to the downside, that NVIDIA should also move to the downside with QQQ. All right, so let's keep playing out this trade. So as we can see, this trade worked out really, really well using the 84% rule, and NVIDIA came down all the way to that gap fill area, which is another confluence and another profit target that we have, and therefore I exited the full position here. With that being said, you guys saw a real live example and also an in-depth trade review of the trades that I took. I hope this was able to show you why keeping your strategy simple is so much more better and effective. If this video helped you, make sure to leave it a like. If you have any questions, put it in the comments down below. Make sure to follow me on Instagram and Twitter, and I will see you guys next week with a brand new video.